Okay, folks, welcome to Market Wrap for Monday. Let's begin with a chart of the after hours action of Ford. Their bond rating has been reduced to junk bond status because they have over $80 billion worth of debt and the shares are getting crushed. Now, they're not the only ones out there that are over leveraged, and this is going to become a growing story in that you have companies that have been borrowing at very, very low prices, debt, and simply buying back their stock. And I'm not saying that's what Ford did. All I'm saying is that a good amount of the rally in this market over the past several years has been due to companies borrowing money cheap and buying back their own stock, and it's worked out well. The question that becomes, at these elevated, lofty prices in the stock market, and I'm not saying that the stock market's going down tomorrow, with these elevated prices and with the elevated debt risk of these companies, what happens when a ratings agency or agencies comes in and says, you know what, a review of your balance sheet and your books, we got to lower your debt rating. It's not good. How are they going to borrow money to buy more stock to keep this market going higher? Do you think with junk bond status, Ford is going to be borrowing at 3%, 4%, 5%, hoping to see that gain on their own stock? I don't think so. So Ford is a canary in the coal mine. Now, when you take a look at the futures action, I haven't looked. I don't expect much to be going on here. And we're up in the after hours session slightly. Ford is not the bellwether it once was. All right, so back to Ford. Keep an eye on the headline risk for this market vis-a-vis corporate debt. It's huge. It's a mountain of debt, and that debt has helped fuel this stock market higher. And again, what happens when they stop buying? And with that, I want to turn to the bond market. Beginning with the 10-year yield, bond yields ripped higher today. Big gap higher. We are at highs now, last seen back in early August. The Stokes, they're hooking up, double bottom setup. RSI hooking up. It looks like the path of least resistance right now, in the very short term anyway, is to the upside. Look at this MACD, like a coiled spring. I think that yields are going to press higher here in the short term. Longer term, we may bounce around. But I'll tell you, if the Fed doesn't play ball with the president's got a big problem on his hands. The U.S. dollar, down day, but it held support. We're holding the breakout point. Stokes trying to find support at the 50 level. RSI is weak. Volume rose to the downside. So the dollar is not looking great, but we did hold support. Price trumps all. The chips, weak, pulling back. I suspect that they'll pull back with the rise in the 10-year yield. And we now have Stokes now probing down below the 50 level. And we may have both lines down below that level by tomorrow. The transports, a huge day today, up over 2%. We closed out the day above the 2 standard deviation Bollinger Band. Volume rose to above average. So I would expect a pullback here and then probably a resumption of this trend higher. The VIX, an up day for the VIX, despite the fact that the market closed up, but we did close off the highs of the day. The S&P 500, again, retested support. It held. We closed off the highs of the day. So at current, all-time highs do appear to be in the crosshairs for traders. Volume, very, very light. The Dow Jones daily chart, very similar to the S&P 500. We closed above support, a hollow-filled candlestick, meaning we closed off the highs of the day. Volume rose versus Friday to just about average. So not a bad day for the Dow. Price is a little bit suspect given that we sold off the highs of the day. The IWM daily basis, a good day for the small caps. Volume, very, very good. It was good last Thursday, good again today. Let's take a quick look at the weekly chart of the IWM. So we do have a new weekly high and a potential breakout on the Russell small caps, assuming that we close above this upper band of resistance. We have higher lows on stochastics. So the small caps are looking interesting. But again, they need to close above this upper band of resistance. And we do have the 20-period moving average on a weekly basis, which is acting as a bit of resistance. Oil, big move today. And we've been watching this. We've spoken about it. Oil is a must-have. We're up 2 spots, 6.3%. RSI broke out, Stokes double bottom setup and rising. Oil looking outstanding. It's probably going higher. Volume could have been better. That means that in all probability, energy moved higher. Yes, it did, 2%. Above the 60 level. That's resistance. We probably still have some backing and filling to do here. We had the 50-day and the 200-day moving averages still above. Volume was very good, really good. That's institutional demand. Let's talk about gold. Gold did not have a good day today. You could probably hear it in my voice. So what we're doing here is that we are probing the lower band of what was a bull flag setup. We did break out above it, then failed. And we find ourselves here 3 days later. 3 trading days later. Now we have both lines on Stokes down below the 50 level. What does that mean? Rallies tend to fade. So do not go chasing the morning or midday rallies on gold, because there's a good chance that rally will fade. Momentum is waning. So don't get head faked into buying gold or the miners right now. Ultimate oscillators broken down below the lower band of support. With yields rising at current, it's going to put a little bit of pressure on precious metals. Nugget. This is a weekly view. And we have a new weekly low, obviously. And it looks as though we're going to pull back and retest this lower band of support in blue. What was the low of the day? Low 31.59. I think there's a possibility that we pull all the way back down and tap the 30 mark on NUGT. And for giggles, what I did was, I rarely talk about Fibonacci's. What I wanted to do is see where we at in terms of the retracement of this bull run. We bottomed out here, which is where we began our analysis using the fibs. May the 2nd, 2019. We have broken through the 38.2% retracement mark, and the 50% retracement mark is here at around 29.50. And you can see that we do have support in that range. So I think that before all is said and done, in all probability, we're going to see a 2-handle, perhaps ever so briefly, but we are going to see a 2-handle, 20-handle, yet again on NUGT, if you could believe that. Volume very high. Let's go to an intraday chart, see how things are setting up for tomorrow. I mean, really, there's just no bids out there right now. We did rally into the afternoon, and then we gave it all back up into the close, and then some. There are no green shoots here. So I would avoid NUGT. Let's take a quick look at DUST. At this juncture, do we want to put on a hedge? The 2-hour chart looks bullish. I don't know whether or not I'm looking to go buying dust at this point in time. Let's throw up a daily chart. So what I think is going to happen here is that we're probably going to rally up to just over $8 per share. We had the 50-period moving average, which is declining. And that'll act as a declining ceiling. And we'll probably get a pullback. The question is, do we get a higher low, or do we roll over and break down to new lower lows? Big up volume here. So as it stands right now, we're just going to look to weather this storm. All right, next chart. On a brighter note, UGAZ daily chart. We're up another nearly 13% on the day today. We're going to need to look to book some profits here fairly soon. The 2278 level looks like a good spot to book profits. That's about another buck higher here. So if we shoot up tomorrow morning, we're going to be looking to book some profits here on UGAZ. So watch for the alert. Angie's List, daily chart. We moved up another percentage point today. Bullish reversal day. A little bit of resistance at the 20-period moving average. Remember, a lot of shorts in this name. I think we could head up here to 850 per share pretty quickly on a short squeeze. So Angie's List will remain long of. Let's talk a bit about Google. So Google had 50 states' attorneys general file suit against them today for monopolistic practices. We knew this was coming. We knew it was coming. They poked their thumb in the federal government's eyes for years. And today we came very close to flashing a doji star formation. That's a sign of indecision. Now, I will say that I was impressed with the fact that the shares were able to rally off of the lows of the day. I thought for sure it would be selling off into the close. It didn't happen. So I just may get made humble by this rally back, and I'm open-minded about it. So we'll be watching for a rally up and through this upper band of resistance. Now, you can see we close at one secondary resistance level. We retested a primary lower band of support today. It held. The question is, will it continue to hold? Will institutions begin to pull their money out of Google? You know, I remember when Microsoft was under antitrust investigation, and those share prices were just crushed for quite some time. And this is why I've been saying that Google is uninvestable. I mean, technically on a weekly basis, I was asked on YouTube, one of my videos, was I still bearish on Google? And I said, you know, technically, this is before the announcement, I said, technically, it appeared as though we were going to proceed higher, and we did. But we couldn't hold it. And I said to the gentleman that I couldn't own the shares despite the technicals looking good because of the headline risk. And sure enough, what happened today, you had the state's attorneys general come out and file suit. The subpoenas will now begin flying. And that is it for tonight, folks. Everybody have a great night. I'll talk to you tomorrow.